Time for Top That Trade. Joining us now, our top players, Alan Nuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business News Network contributor. Good to go for our trader game. Round number one, guys. Terminal velocity. The dollar is not down. It's rising with 6 months highs. There's even a quadruple top at 105. What is it saying about rates?
Oh, it's saying that it's not over. It's pulling us back in yet. Now, it's close to over. It's very close. The terminal rate should be right around 6%, give or take a little bit. So there's a chance that there's no rate hike here in the next meeting. And then the meeting after that, there's a 50-50 chance. But most importantly for me is that rates, if we go a year out to the end of 2024, are going to be around the 4%, 4.5% level. So the market's got to recognize that, and that could add some momentum to this upside move.
I actually think that it's not only about rates when we look at the dollar, it's about economic data that we're seeing in Europe, which is getting really bad, especially in places like Germany. So more than a rate play in the dollar, it's become a flight to quality play in recent weeks. And the other thing is if you look at from the Fed minutes this week and you look at the amount of debt that people are taking on right now, it's going to be very difficult for the Fed to justify more aggressive rate increases.
Round number two, pundits picks. Goldman Sachs says there's only a 15% chance of a recession and crude oil could climb to $107 per barrel. Now that's tough on American drivers, but it does show a robust economy when crude is up. What is your pick to click?
I heard from one major refiner that said, listen, there is no plan B. We have some of the tightest supplies we have. We have restrained refining capacity. If anything goes wrong, prices could go up. And that means 107, even though it seems high to me, isn't off the table.
So they always say the cure for low prices were lower prices. People stop their production, their investment, so forth. But from a simple math standpoint, we traded between 70 and 90 for a year. So breakout of that 90 targets 110. So I think Goldman Sachs is actually underestimating.
Round number three, old mares have new shoes. Have you been watching? Intel, Oracle, and Cisco all are at new one-year highs, while the 2023 high flyers, NVIDIA, Meta, Amazon, Tesla, Microsoft, are off nearly 10%. Are you into buying tech show horses or workhorses?
The workhorses. When Phil and I were young traders back in 2000, these were the stocks. I love Intel still. It's been between 25 and 35 for the year. Breakout target's 45, and we've just broken above 35. So you got to look at these stocks. Oracle, Intel, I mean, these are the old guard. These are the old guard. This is not NVIDIA, but the rumor has it that Intel's, working on some chips that kind of keep up with the new kids on the block. So let's see. We also got to throw Cisco in there. Some oldies, but I'm going to say goodies.
Cisco, old workhorses. I like it. I mean, I think you're going to have to get some oats and put oats in there if you're going to feed the horses. But no, I think what's happening here in the stock market overall, why the stock market continues to go up, even why there's concerns about valuations of many stocks, why only a few stocks are leading this rally in stocks, it is about this AI revolution.
Here's your bonus round question for today. There's a new Gatorade drink. What is it? Cherry, pear, or water?
I'm going cherry.
I agree.
Oh, the answer is water. That is a cold, hard splash. Great job anyway, guys. Business First AM will be right back.